The topic is 45-degree angle stop loss. Now there are different trading methodologies. There are different ways of entering a trade and exiting a trade. But one common thing that we should all understand is that any trading plan should also have a stop loss. Can have a profit target or can have a trailing stop loss. So either we have first a stop loss, then a trailing stop loss. Now when we say trailing stop loss, we mean that now once the market starts moving, let us say it is now moving like this. It is moving like this. Okay. Then we need to, once we have entered here, let us say we have entered here. Then initial place is that we are putting a stop loss somewhere here. Right? So this is our first stop loss. But after that the market goes up a little bit, comes down and then starts going up. So we cannot have this as a stop loss now. The initial stop loss has to be moved higher and higher. So that will depend on what type of stop loss, trailing stop loss you would like to have. Some investors have some sort of a stop loss which is the rally minus some points. Maybe it's a Nifty, it goes up, so minus the high minus 100 points or high minus 150 points, like that. Okay, so there is no clear reason why one should have something like this, but it's a monetary stop loss. Probably on some numbers also there may be a fancy, for example Fibonacci number also. So there is some basis on which you put in a stop loss. There are stop losses which can be done with the help of moving averages. Stop loss with the help of moving averages. So this is also possible. That is, if it starts cutting again below a 20-day moving average, you can go for a stop loss. Then we have already identified with the help of super trend for which we had some sessions. So the super trend can also be used as for the stop loss. That is a volatility based stop loss. You can have, depending on the volatility of the asset, you can have a volatility based stop loss. Then of course you can have based on Fibonacci number or ratios. Okay, Fibonacci number or ratios. Then you can also have on the basis of the pivot point intraday. For intraday also you can carry forward that pivot point like S1, S2, like that, or R1 or R2, depending on if you are in a short position. Some investors may use this for the daily basis or on a weekly basis chart also. They may use the pivot point formula for calculating stop losses. So there are different ways of using stop losses. But one common thing is that any trading plan that we put should have the entry point which should be clearly defined, because otherwise we will not be in the trade. Then we should have a stop loss. Then the profit target can also be a trailing stop loss. It can be a trailing stop loss, right? So this has to be there in any trading plan. Then of course the instruments that you use, depending on the money resources that you're going to allocate, that will depend on whether we are going to use futures or you're going to use options and what strike. Those things come later. But what is very important is that after identified the entry point, the stop loss, and the stop loss should be moving stop loss, because if you're keeping always one fixed stop loss, then probably you will have a problem if the market suddenly falls. Then in that case a big profit can also evaporate. So somewhere you have to keep a stop loss which is also moving stop loss. Of course then you have got a normal one is the pivot point, then the pivot point which is high low pivot point. So this important tops, important bottoms, that also becomes a stop loss. So there are many methods of applying stop loss, and one such method is the Fibonacci or Gantt fan they call it, or a 45-degree line. 45-degree line. Of course I will explain to you what exactly we mean by this 45-degree line. Probably it will be helpful for you to base your probably add one of this also as a tool, because we have already said that the trading is something which is both a combination of science and art. that you must know different types of techniques, but how you apply will depend on the trader, because his personality, his appetite for risk, all those things will make a difference regarding where you're going to put in a stop loss. But what is very important point that you should know is, what is the time frame or what is the high to low trend place. That is what we call is which trend you are picking up, which trend you are going to pick up. That is very important, because it means so many things. Because let me give an illustration. Now let's go to the chart. Probably you will be able to appreciate that. Sorry. Now let's say, what is the trend that you want? Now for example, weekly chart. This is a weekly chart, and this is a big weekly chart coming from the bottom of the pandemic time to this high. So are we looking at this particular place? Are we looking at a trend? Are we a player looking at trades only based on the pandemic low to the recent a couple of months back, whatever the high? Is that what we want to do? Say there may be some investor will be looking into that. Okay. Now, for those who are already in a short position, are we looking at this trend? That is the highest high point to the lowest low till now. Are you looking to play your trend based on this high and this low? Or are you looking at this high, which is 18,350 high, to this recent low? What is it that you are looking at? So that definition is the most important point to start with. Because if you are in different time frames and in different price levels of entry and identification of the trend, can mean a lot of different things. Because when you're drawing, particularly when you're using certain type of numbers like Fibonacci number, or you're looking at something like a Gann fan or a Fibonacci fan, because all those things will ask you to identify the place from where you have to draw. Okay, so that means you have to identify what is the trend that you want to capture or you want to put in a stop loss. Now first I will explain to you what it is, then with the illustration we will look at the charts. Now see, let us say there is a from here the market rallies like this. Okay, a particular stock or commodity or currency or index, there is some place from where it a bottom is made, then it goes up. There are some swing points in between. Now in the case of a stop losses which are based on pure price levels, for example, pure price levels mean, let us say, pivot high low. A pivot low, this is an important low, right? This is an important high. So you may either put in a stop, if the price starts to drop below this high, you may put in a stop loss. So this is purely based on the price level, or you may elect a stop loss somewhere here. So if it starts falling below this, you may get out. So this is purely based on price. Okay. Now the Fibonacci fan or the 45-degree angle, the Gann fan, also uses time factor, because the speed at which the rally takes place and then the speed of the fall is also counted while keeping the stop losses. So time is also given an important dimension in Gann fan, Gann angle or 45-degree angle. So what we are trying to do, till now we have seen stop losses purely in terms of price action, like now a moving average 20-day last 20 days price is averaged, a pivot high low like this, then a traditional pivot high low calculation R1 R2. So these are purely based on prices, where we are not involving also in terms of time factor. The Fibonacci fan or the Gann 45-degree angle, whatever you call, is also includes the price, it also includes the time. Now we know the Fibonacci ratios. We have analyzed and we have had webinars on this before. So there are certain important levels in Fibonacci that we have seen. That is, the first raise is 23.5% retracement, then there's 38.6, okay, 61.8, then 76.5. But in all these things, though Fibonacci 50% is not a Fibonacci number, it is a very important point. It's a 50% of from one high to another low, from one low to another high, or low to another from one high to another important low. 50% is also, though it's not a Fibonacci ratio, it is also considered a very important point. Now, what in the case of this 45-degree angle, say let us say you try to make the entire picture square. That is, you try to make the entire picture square. When I am saying square, what you do is that, let us say this particular let us say this has rallied from 20 rupees to 40 rupees. This script has rallied from 20 to 40 rupees. So what is the 50% retracement of this? Is 20 to 40 is, the difference is 20. 20 into 0.5 is 10. So either you subtract 10 from 40 or you add 10 from 20. So you get something like a 30, let us say. You get 30 rupees. Now, let us say the time. Now you have got only in the normal types of Fibonacci ratios and numbers, you have only the price levels. Now we are looking at the time factor also. So how many days it has taken from 20 to 40? Let us say it has taken 10 days. So 10 days it has taken to rally from 20 to 40. That means 20 rupees has rallied by in 10 days time. If that be the case, what you do is you now draw a grid. You draw a grid. Okay, draw a grid. Let us say. So this is entire 10 days. Okay, this has gone for the entire 10 days. Now you also divide this, as you divide the Fibonacci ratio in terms of in the price level as you do it. Now this 20 to 40, you can make it as 23.5, 38.6, 50, 61.8, 76.5, like that, right? So when you do a Fibonacci ratio, you will do that. Similarly, in terms of price also you do that. So let us say this is 30 rupees and exactly 5 days. Let us say this has taken 10 days fully. So let us say 5 days comes here. Right? So you are dividing the time frame also by 50%. You are also doing the price action also by 50%. So the price action is 30 rupees. So now what has happened is you have a horizontal point line which is 30 rupees. You have a vertical line which is at 5 days, because it has taken 10 days from here. Let us say this is April 1st and this is April 11th. Okay, so let us say 10 trading days. Okay, so it has taken 10 trading days for the rally to go from 20 to 40. So what you are doing is you are dividing the price and time in equal ratio. Okay, and then drawing a line connecting that. Now let us say this is the 30 rupees on the horizontal side. On the vertical side it is 5 days from this place, from this 20 rupees. So now you are drawing a trend line from, let us say, from this place, because you have identified this particular trend as a trend, as from where you want to know the level below which you will not keep this particular stock, okay, or temporarily. So this is the place from here, exactly on the intersection of the midpoint of both the price and time, you are drawing a line. And when the price drops below this, okay, so you are not waiting for this 50% here in terms of price, you are waiting for a combination of time and price, and then you are drawing a trend line. So what you are getting is, you are getting a stop loss below this trend line, which is the 45-degree angle, because it is an equal proportion. So what is 45-degree angle? It's an equal proportion of time and price. It is equal proportion of x-axis and y-axis. So here you are getting a time intersection at the 5 days from the point from where you want looking at the trend to where the trend is ended. Okay, so that entire period is 10 days. So you are getting exactly, you are drawing a vertical line at the 5th day, which is the difference between this trend entering day to the trend last point. And then you are also doing a 50% of this entire rally that has taken place. So here in this case it has rallied from 20 to 40, so the midpoint is 30. So similarly the time it has taken is 10 days, so the midpoint is 5 days. So on this you are making an axis, and then you are drawing a line connecting from the bottom, from where you are measuring the trend to this intersection point of the vertical of this axis. So wherever that price starts to drop below this, then we can say that we are cutting a 45-degree angle. So then we are exiting the trade. Okay. Now, is it that we should wait till that time? Okay. Now, I told you about the 45-degree. In GAN, there are different angles. No, they will be having different angles in that. So now, when we are talking about 50, we are talking about a ratio of exactly the 50-50 ratio. Probably, you can look at the price coming down to 76 to this of 76.5% and the 76.5% here also. That is the price also on 76.5% and the time also on 78.5, whatever it is. So based on that also you can draw the line. So depending on how fast you want to get out of the trade, how much you would like to wait patiently, and all those things will depend on your trading plan. But one important trading plan that is used is the 50-50, which is the 45-degree angle. So a 45-degree angle is a very significant stop loss trend line used by traders. But if you ask me that whether when does the trend gets completed, now it is like this. When it may fall to a 78.5% thing also, it may fall, and then it may start rallying, So when we see the charts, we will be able to identify. Now once it has started to break that 45-degree angle, suppose if it starts breaking, then any rally also now will have a resistance at that place. Any rally that comes to that will have a resistance, which means on intraday you can keep on measuring where it comes and whether we can go for a short or long. Now we will illustrate to you how to use that. We will go to the Nifty chart and we will use it in the Nifty in trading view. Now let us say this is the weekly chart. Okay, this is a weekly chart. So we will now look at the daily chart. We will look at the daily chart. So this is a daily chart. Now let us say we want to know what is the stop loss for that is on a 45-degree angle that we should use from this low to this top. Let us say this is the low. This is the low. This is the top. Right. So this is a daily chart. You can put it on an hourly frame also. So let us say now we are in the daily chart. So here let us see on the left hand side of the menu, then you have in this menu you go to the either you can use a GAN fan or you can use a Fibonacci fan. See here, let us say I am using a GAN fan and I will demonstrate to you. So now we are drawing, keeping between these two low, right? So this 2 bar 1 here represents the 45-degree angle. That is the first line where probably a stop loss is generally applied. First line generally where a stop loss is applied. Now let's say it may start coming down from here. Let us say the point is right now, tomorrow it comes at 16,910 or so, right? So 16,878. Right now it is moving at 16,878. Is the place where the 45-degree angle is coming for this trend, which is the from 15,647 to 17,425. Now that is coming right now. The 2 bar 1 angle is coming at, that is the 45-degree angle is coming at 16,878. So that is the stop loss in the first instance, and then after that if it starts sliding, then it may keep moving to the next levels, which could be these levels which can come, then probably these levels can come. Okay, so this is a generally it's applied. Okay, the 45-degree angle is applied. So this is based on from this line to this line. Now let us look at whichever point that you want. So let us say I'll remove this from I'll remove this, and then probably look at let us say now this low. See, let us say there is a low here. Okay, there is a low here and there is a high here. Okay, so let me try to see whether from this place to this place whether we are getting where does the gun stand? 45 degree stand. See, 2 days back it opened at 17,094. So that 17,094, if you see, that was a 2 bar one for one for one of the important pivots. For one of the important pivots, and it held on to that particular level and then started to fall. Okay. So on that particular day, that was the low. So that's where probably you can make a very important trading call. That on this particular day, if it had started to move below 17,000, whatever it is, 17,070 or so, it came down to 17,070, which is the 45 degree angle for the trend from this particular pivot. If that be the case, then probably you are looking at buying somewhere closer to this particular place. Probably you will be putting a stop loss at the next level below this particular level or so you will be putting it. So you might have bought at 17,070, and probably on that day if it had gone below the next line, which is 16,905 or so, maybe you would have elected to probably you could have gone out of the trade. So that's one way of looking at this one, that is identifying some important levels of support and resistance using the 45 degree angle, and if it starts slipping below that 45 degree angle, then probably you're looking at putting a stop loss. Now having said that, now what has happened is in this particular day, now it has moved below, right? So now if it starts to move tomorrow, let us say, now this line being broken, this will start offering resistance now. So let's say tomorrow it goes up. So somewhere around 17,360 or so, somewhere around 17,359 to 360, we could see some sort of a resistance coming. So let's see 17,359 to 360 levels, whether some resistance comes tomorrow. Now you are able to identify an intraday level short using this. Now let us say normal pivot point low, I low calculation also. If you look at it, 17,235, 17,003 today, and 17,225. So we look at the R1 place, 17,235 plus 17,002 plus 17,225. The PPA is 17,154. The R1 is 17,306. R1 is 17,306. So R2 is that first resistance 305, 306. Then you got 230 levels, right? So 17,154 plus 230 comes to 17,384. So this place also comes closer to the tomorrow. Probably 17,340, so somewhere around the 17,340, 350 levels. R2 is coming at 17,384, 85 levels. So chances that it may not exceed R2. So in case if there is a rally tomorrow, we may see definitely a resistance building closer to 17,340, which incidentally this happens to be the high of this 17,350. So we could expect some sort of, based on all these factors. Now your pivot high at 17,350. A 45 degree angle which was from one pivot, it has been broken, so that itself now will become a resistance, which is 17,350. Then we have R2 at 17,380, so that means it may not go above R2, 17,300. So if there is a gap up opening tomorrow, 17,330, 340 levels, then I think probably you should not keep jumping to do that. So we should wait for some sort of a retracement. So that retracement, from that retracement, we should now go for a buy based on that particular retracement. So now let me say I will remove this. So we will go to a smaller chart, hourly chart here itself with this. So let us say in an hourly chart we wanted to do the Gann fan or the 45 degree angle. So let us say today. So if you see right now it has broken the 2 bar 1. So probably it can move, keep moving to slightly higher levels. So when it started to break this, also when we are looking at some sort of a trend based on from this high of 17,442 to today's low of 17,003. So any break above this, which is the level which is 17,195, 197, I think our stop loss should have come. So when you are asking what is the stop loss that we should put, we should then first, the moment such a question is asked, then we should say what is the trend? What is the trend on which you are trading? Now I am saying that I am trading the trend of 17,000, this high which is 17,440 to 17,003. If that be the case, then the first thing that you should say is that the stop loss for us comes closer to the 17,194, 195 levels, because if for that particular trend, that is the stop loss. Now it means different. Now for example, let me say, I'll put it this way. Now in hourly chart itself, or see, let me say you are looking for trading a trend which is from, let us say, this is yesterday's high, because 25th March. So let us say you are trading based on from yesterday's high to today's low. Okay. Now that is your trend. You want to keep a smaller stop loss. Okay. Now, if that be the case, you are trading from yesterday's high to today's low, which came right up to in the morning time, then the 2 bar 1 stop loss came here, 17,140 levels. So closer to the 17,140. So in a break above 17,140 itself, probably it should have alerted you to get out of the trade. Suppose yesterday was placed with 17,000, this high was 17,294, and today it came to 17,003. So the stop loss for you, if you are trading this particular high to low, then in that case the stop loss is 17,140 levels, 17,140 levels. So it will all mean different, the stop losses can mean different things for different type of traders based on the levels which they are identifying as a level based on which they are doing the trade. And also the frequency of the trades also matters. Now let us say, now you are assuming that you are on the long side of the market. Let me say you are on the long side of the market. So I will go to what we should do right now. Assuming the market is falling from this particular level itself. Assuming that the market is falling from this level. Then in that case, we are putting now from this low, let me say. So if that be the case, now my stop loss now comes closer to the 17,140. So the stop loss that I am having right now, if you want to be on the long side of the market right now, you can be on the long side of the market keeping 17,140 as a stop loss. So you entered the trade based on the 17,000 based on time factor from yesterday's high to today's low. So what we are doing is, from today's low to today's high, suppose if you are already long, the first stop loss that you are getting is 17,140. Now, as it develops, let us say tomorrow it keeps on rallying to 17,310, 320 levels, then the new, then you have to draw the 45-degree angle from the 17,002, which is today's low, to tomorrow's high of 17,000, whatever that you are going to get at that point of time, and then look at where the 45-degree angle is going to get cut. So we need to work out different approaches, but whichever approach is comfortable for you, you can choose whichever. But you have to be consistent. So the 45-degree angle is one angle which can help you to identify a trend, because there will be a lot of questions raised on what is a trend. So we have already identified trend based on moving averages, or on a Dow theory, classic Dow theory based on the pivot point high to low point low cut. We have also identified based on the trend line. Now let us say you have a difficulty in drawing a trend line, straight trend line. Then in that case you just go for a trend line which is based on the angle, and that angle is a 45-degree angle. So from whichever point that may you get a 45-degree cut, Okay. So I hope now you are able to get the point as far as Nifty is concerned. We will illustrate that in Bank Nifty also. But we will look at the slightly bigger time frame also here, monthly. So monthly chart, there are different places from where you can do Gann angle or 45-degree angle. So let us go from the pandemic short positions. So from the pandemic short position, a 45-degree point has not been cut at all. It is coming closer to this month. It's getting over. So next month it's coming closer to 14,700. So as long as 14,700 is not cut, I think the trend we can say based on this 2-bar-1 trend, I think we should say we are on the upside. Now we look at the from a different place. So let us say from this particular pivot right now. It has come very closer to the point. See, now actually this particular it should have held on to the 16,085, 87 levels. Slight deviation was there, but fine. It has now started to go above this. So any fall now should hold on to this particular line. Now let's draw from another place. Let's say probably we are drawing from this particular low. Okay, this particular low. See? Now, when we draw this, you can see clearly that this was the important low. Okay, the 2-bar line came here. This is the 2-bar-1, right? So any break which is below 16,787, okay, a couple of months back, 1, 2, 3, 4. After that, when it started to fall, then we have to presume that the trend was over. We have to presume that the trend was over. And again, we now started to, once this low was penetrated, then there was a giant 45-degree angle drawn from this particular low, So if you are trading this particular low to this particular high, we should have been out at 16,800 levels. We should have been out at 16,800 levels. And then subsequently it started to fall, and probably the last important line is the 8-bar-1. This is the 8-bar-1. It has not come to that particular level. So right now we are looking at the trend. Generally speaking, the overall trend is still good, but still not out of the woods as far as the trend is concerned in the monthly chart. And we look at this because we have already highlighted that if this has to happen now, it has to cut this particular high to low. Okay. Now this month it has cut the 2-bar-1. Right now it has now cut the 2-bar-1. Right? So it has cut the 2-bar-1. So we can say that based on this high to low, 2-bar-1 low has 2-bar-1, that is the 45-degree angle has been cut. So now we are on the long side. This has turned the 2-bar-1 from this, that is 45 degree from this particular low is not broken, which is the recent low, which we have already identified. For example, let me say, now let us say we are on the upside of the market. If we take it on the based on the trend line, let us say we are on the upside. So in that case, what we should do is that we will go to the daily chart. On the daily chart, from this particular low, we should draw the 45-degree angle. Right, so this is what we said. No, this level is not broken. This is 16,880 or 890 levels, whatever it is. This has done, no, it is not broken. You are now on the upside of the market. So because this was based, your entire thing was based on a 2-bar-1 cut. And the 2-bar-1 cut from the highest level till the lowest level of 15,600, which I think that has been broken. So what we are proceeding now is that as long as the 45-degree angle this angle. So yeah, same place. So we entered into long position closer to the 17,000 because that's the break of 2 bar 1 line. And so right now also we are keeping the stop loss based on that also at around 16,890 or 16,900. So almost we are at a break even now based on the position of 45 degree handles, 45 degree angles, right? So this is how you adopt your trading strategy or trading stop loss based on angles. And most important angle is the 45-degree angle. Okay. Now, whenever we see, from now onwards, when we see the market heading towards some higher levels, we have resistance of different other angles. For example, we will have shortly 17,450 or 450, 460 levels. Then if it starts to go up, then we may have a closer to 17,700. Then it can go right up to the level. So we have different resistance that can come on based on these levels. So on any particular day, when we get some sort of intraday points, we have to go for a sell. We can use all these lines to place our sell positions. Now we will look at the other this one also right now. So this is a normal trend line now which we have drawn from close low to the important bottom of 15,700 or so. And let's say now for this particular line now will be the support. Now this particular trend line which we have drawn, and if the market falls down from this place to this place, so tomorrow, let us say it comes to 17,090. So the first support that we are looking in case of any fall, it should be a 17,140 which we set in enter 2 bar 1 line. And the last line that we are placing right now is 17,090 for the day. So tomorrow, if the price falls to 17,090, I think it will definitely get some support based on the trend line. Now, day after tomorrow, suppose if it doesn't come to 17,090 tomorrow, then it will come to 17,169, 170 levels. So we can keep the stop loss along this particular line. So this may not be a 45-degree line for this one, but nevertheless, since it has taken support today, we can keep that particular line. That is, whatever line that we have got till now from where it has taken support, that line with an important bottom can also be a very important support level. So this is another play. This is another way normally the trading thing can be used. Similarly, we have seen resistances also where probably this particular line. So this can be a resistance line because we may see resistance coming closer to 17,350. That is what we said just now. So tomorrow, if there is a rally to 17,350, based on this trend line from the top to bottom, from important top to important bottom, now we can look towards keeping a sell position. We can add to as a stop loss. So we have used the same trend line for identifying an intraday resistance point also. And intraday sales signal now we have placed at 17,350. And intraday buy support right now we have placed at 17,090. So we are looking
normally you're looking at some sort of trading call even for a day or intraday or so. And similarly, whatever lines that have been broken also can be used. So, so whatever line that has been, uh, 1 minute, sorry. Now, see, this low, this high, this has been cut, right? So once this has been cut right now, whenever it starts moving to that particular line, we will have a resistance in this. So we should now, this is also a parallel line to this. So we should be expecting some sort of a resistance is on the very, very steep move, and it starts going above this. And any day, we will have a resistance coming at this place. So tomorrow, if it starts moving, then the biggest level will be 17,472 levels, approximately. Then after that, it will start moving towards 17,557. So this line now will become a very, very effective resistance point. So once you keep that curve, if it starts to cut to that particular go near that level, it will definitely find its resistance and start pulling down. So right now, we should be looking at these two lines. One line is a line connecting today's low with two important bottom, and as you can see, 670.
Huh? Sorry for the disturbance. So what we are saying is that you can okay, the 45-degree angle helps you to clearly identify a trend change. Similarly, this is nothing. The 45 degree is also nothing but a trend line. Now, sometimes when you draw that, it may not exactly come to be a 45-degree angle. It can be a slightly different. Now, in this particular case, it is not a 45-degree angle. This bottom to this bottom to this bottom is not a 45-degree angle. But if it has taken an important support, we need to consider that as an important line. So we need to make that sort of an adjustment. Based on this only, we can look towards which line is very what stop losses that we should. So generally speaking, it should be if you even go blindly by a 45-degree angle, fine, you can go by a blindly by a 45-degree angle. But what I'm saying is that in case if it has taken a support which is much below or above 45-degree angle, you cannot consider that only as a sacrosanct. Then in that case, whatever line, whatever pivot point that you have got, we have to use that also as a trend line for putting your stop losses. So right now, we should put the 17,090. Now, at this point of time, we can put 17,090 as a stop loss. And right now, because there are two important bottoms, so we will have a resistance at this place. Then we will also have a resistance at this place. So now we will look at Bank Nifty to know what we can do with Bank Nifty. So this is Bank Nifty. So we will for easy thing, first we will draw a 45-degree angle. See, perfectly it has come this time. Unlike Nifty, you can see the 45-degree angle. We draw properly, we got it, right? So exactly it has. So this is a very important level of support. It has held on to this important support. So we should be expecting this line to hold, which means now we can just slightly redraw this particular line for the time being. Okay, so this is going to be a very important line for us, right? So Bank Nifty right now we will have this, right? So tomorrow if it starts to drop 35,154. 35,154 will be a very strong support for Bank Nifty. Now the same 45-degree angle that we have got here, let's say this is almost the same, so we will move it down to the next important pivot point, let us say this place, right? So any rally right now will meet a resistance on this line. So we are expecting probably the resistance now to come closer to 36,350 levels, 36,375. So right now, tomorrow, if that is a big rally, we can expect a resistance closer to 36,375. It closed at 35,710, 36,375 at 600 and 700 points, 1.5 to 2% rally. If it happens in Bank Nifty, it is a sell first on an intraday. And if it starts coming down to this this place right now, it's going to be a support. Clearly, so we are able to mark our support and resistance here. So here 35,274 is going to be a support as far as Bank Nifty is concerned. So if you are able clearly with this trend line, which is also a 45-degree angle in this case, we have been able to identify the important support resistance points. Now, also let's say we draw from this particular place. Let us say this is an important place, so we will draw this. So here if you see, this place has been cut, which is a very important level, which is an important level. So you can just see the 2 bar 1, this is a 45-degree angle, and this 45-degree angle has been cut from a very important top. So which means the trend changed here. The trend changed here. So this is the trend change point, and that is where a lot of support resistance keeps coming. So tomorrow, one is that this place also will be a resistance. So if there is a rally further, one is this place, okay, another is this. So if it starts to move tomorrow closer to 36,590, okay, 510, 515, there's one place, and then there is a angle which we can draw from here to this place also. So mostly we should see some sort of a resistance coming at 36,000, 36,028. So today it closed at 35,710. So we are expecting a resistance now at 36,030. First resistance will come closer to 36,000. Support is 35,250. This is Bank Nifty for the further case. Then after that, if it starts still going up in a very substantial manner, it can go anything between to 36,400 to 36,500. This is also a possible. So we have to see how it behaves around 36,030. If it starts cutting about 36,030, then in that case we are further bullish for a move towards this. And if it starts falling, then this will offer a support. This will offer a support, and mostly, you will get a big bounce from that particular level. Okay, so this is how you use it for trading. We will now see one particular stock which has done very well now, Reliance, based on the same concept. So Reliance Industries now, it's a new very important high. So almost going back to its previous highs of 2750. So a very big formation. So we look at the same 45-degree angle from important bottoms and lows. See here. Now, if you see this was a very important place which was cut. Once it was cut, then it started to fall to other important trend lines. So it came down here, then it came down here, all those places. So now it has started to move up and has also breached all these lines. So it has also breached all these lines. So any fall now will take place, can even have support at these levels itself. So 2375, 2380, which we have been talking about, and some important highs and lows, probably can be a very important support next month. So 2370, 2380, those who are looking at cash market buying can look towards buying Reliance at 2370 to 2380 levels. So normally, let's say from the bottom to top. Now we have seen from the top to bottom. Okay. So this was cut here. So this line with this. So this was cut here, right? So once it started to cut 2450, it started to move up. So now any fall right now, I think the same place which was cut, which is 2440, 2450 itself, can be a very important support. So if you are trading only based on the 45-degree angle, you please continue to do that, because you have to look at one particular strategy which you can hold on to consistently. So 45-degree trend line is one such thing which offers the facility that if it starts to cut above a 45-degree angle from an important high, then you apply your trailing stop loss, and also you can go long. If not, if you don't even go for a long, at least you can put in a trailing stop loss. Similarly, if you are on the long side of the market, then keep 45-degree line, a trend line, as a trailing stop loss. So this is another tool in your kit which you can consider if you desire. So this is another important information that you can incorporate for trading. So if you have any questions now, please ask. Thank you. Okay, thanks very much, and we'll look towards another webinar in this week with the new subject. Thank you.